Good evening, members. Welcome to the study circle meeting on works contract under GST. Today we have Venugopal sir who will be speaking on the topic. I request our chairman to escort the speaker onto the dais and hand him over the floor. Request our chairman to give a welcome address before us.
Good evening, members, and I welcome you for the today's program on works contract under GST. It's a very interesting session. There is a lot of changes happened in even recent council meeting, also GST council meeting. To update on this, we have an eminent speaker, none other than Venugopal Gella sir. He is a very senior faculty member and practicing member in works contract especially. He is going to enlighten us on this topic today. Once again, I welcome you all. Over to Pramod.
I would like to take the privilege in introducing CA Venugopal Ji, who is the founder partner in Mrs. Venu and Vinay Chartered Accountants since 2002. His academic credentials include securing All India 45th rank in CA final. He has completed various certifications courses from ICI, and he is also a certified information system auditor. He has also completed one-year course from IIM on data analysis and business intelligence. He is an active speaker at ICI on GST, especially on technology and its implementation challenges. He has authored various industry-specific handbooks on GST. He has contributed to the technical guide on GST audit released by ICI and other publication materials. He conducts workshops on filing returns with ease use of automation. He has developed a lot of Excel-based utilities on GST like JSON Reader, creating JSON file, GST Validator, GST Impact Reader, GST Estate Project with Switch Decision Analysis, GST Audit Working Paper Tool, etc. He is a GST faculty for ICI and conducted various workshops and webinars. He has played an active role in drafting and design of along with GSTN and NIC. Apart from his audits, he has hands-on coding in VB, NetArt, Python. He has also reviews database design. He conducted various workshops on corporates on use of technology, improve efficiency at work using Excel, building automated reports from accounting and financial applications. He was behind the development and managing of cloud applications like TypeSmile, InstaFinancials, and others. With this brief introduction, I welcome you, sir, and I would like to present to you all Venugopal sir.
Thank you, Chairman. Thank you, Sadiq, for the kind words in introducing. And good evening, members. So, today's topic on works contract and GST, it has its own challenges. Generally, real estate itself has challenges, and what we are looking at in today's topic is real estate is a broad subject, so we are not touching upon construction of apartments or project layout developments. We are looking at real estate activities other than these activities. And feel free to interact, and whatever the questions that you have, let's have the discussion as we go. I would be covering from the basic provisions which are under the law. The more important focus would be on the rate changes that have happened at various point in times, and what is the current rate, and how does this change in the rate impacts on the taxation, invoice reporting, or the time of supply provisions, and other miscellaneous aspects of exemptions, input tax credit, and recording. To start with, the first and foremost, understanding what is works contract. The definition of works contract, unlike the erstwhile law, VAT or the other regime, where The concept of works contract is where there is a material and labor involved. Is where which was thought as a works contract. But when it comes to the GST, works contract is purely restricted to where there is a material and labor, but however, which relating to immovable property. If the work has no correlation to immovable property, then it's not a works contract. Let's say I got an order to do a data center setup, wherein I procure a lot of servers, everything, electrical, wiring, everything I do. But however, that is predominantly to set up some computers and along with the related hardware and everything. It's not a works contract, though there is substantial element of service is involved. Even in GST, there were confusions on works contract where there is an earth-related work happens. For example, I will install a machinery to the earth. Now definitely there would be some element of civil work would be involved. Just because there is some element of civil work involved doesn't make it as a works contract. And the classic confusion case of works contract, if I have to say whether it is a works contract or not, is the installation and of these solar plants. Now, if you see these windmills, where there is a huge heavy windmill equipment which are there, these windmill, whatever we are seeing above on the earth, they are deep rooted. So someone has to do a very deep site preparation. Now the quantum, the strength of, since they are heavy equipment, so you got to give it as much as strength that you are giving it to a building or whatever. And the area that you will be covering is not just the iron rod base that you are seeing, but it is some 50 meters kind of a radius you will be doing some site preparation activity. Now whether is that an immovable property? In a common man parlance we treat it as plant and machinery, right? Since it's a windmill. Now, but predominant there is an earthwork that is there. If it was not for GST, it would have been definitely a works contract under the expert regime. So under GST, if you have to say something as a works contract, then there has to be a construction activity, whether it is for building or an installation of an immovable property. Now you may ask, what can be an immovable property which is other than a building? There are a lot of work that happens on the plain earth without even completely doing any building structure. Even that is a works contract. However, what is critical is there shall be an element of transfer of property in goods, whether as a good or in some other form. So, for you to call something as a works contract, you also have to do some activity which is of the goods. Now, I want to bring one distinction here. I am into construction of a building. Is construction of a building a works contract? What do you say? Plain answer is yes. But the next question that you have to ask, is it with material or without material? If it is without material, then I am doing a pure labor service. Will a pure labor service akin to a works contract? Again, the answer is no. So the works contract, you definitely have to do something where there is a material and labor is involved, and more importantly, just because material and labor, not everything is a works contract, but it got to be towards an immovable property. Now, it need not be from the origin. What do I mean by need not be from the origin? Let's say a building has already been constructed. The construction of building has already been completed, but you have only undertaking a contract for putting this side walls, some steel structure and other activities, right? Even they would be a works contract, because once you embed this steel item, the grills and other things, they would form part of the building. Anything forming part of the building is an immobile property. One may argue stating that I can demolish this side civil structure and take these items and reuse at a different place. Today everything is modular. Even if you go to any industrial places, you will see a wall is raised only 10 feet. And 20 feet above the wall is everything built using a steel structure, which is purely detachable, removable and can be taken. The moment you can remove it, detach it, can you still say as an immobile property? So, is mere movement is the question? The answer we have to also look at it is the mode of annexation and the purpose of annexation of that goods. The steel was a good. When you annex it, it is a good. Minimal labor, majority material, but still it is an immobile property, because the main purpose of that, so for example, this AC, rather than cassette AC or an AC which is something like that, it is removable, but the functioning of it cannot happen unless I annex it to the wall. For it to have a wobble-free operation, it got to be erected to the earth or to the wall, which makes it immovable. But that is the activity of installation of an AC is not an immobile property and hence not works contract. So there is a very thin line of a difference to distinguish supply of goods, supply of service and works contract, right? Because there are litigations that would come up on this area. So, what is immobile property? Is it defined? The answer is no. GST Act did not define the immobile property. We can take clue from General Clauses Act, which says immobile property includes, and it's an inclusive definition, includes land and benefits that are arising out of the land. Again, the classic dispute, erstwhile service tax era versus GST era. The exemption services under the erstwhile era was provided on immobile property, but under GST the exemption or the Schedule 3 entry covers only land. So there is a difference between a land and immobile property. Immobile property shall include land, benefits that are arising out of the land and etc. So I would say immobile property is a wider term than the land. And when you go to the Registration Act, immobile property again includes land, building, various items which have been attached to the earth or permanently fastened. So that's what the Registration Act says. And the Transfer of Property Act says immobile property is anything which is rooted to the earth and something which is embedded like walls, buildings, and something which is embedded for a permanent beneficial enjoyment of that to which it is attached. And that is where I have distinguished where your civil structure in steel fabrication erected versus an air conditioner erected. So one becomes an immobile property and other doesn't become an immobile property. Now, this supply of works contract will take shape of a composite supply, because you are supplying goods and brokers, also supplying the services. Now, whenever it is a composite supply, we definitely know the character of the supply is the principal supply. However, we also have to read it along with Schedule 2. And wherein Schedule 2 clearly says Works contract is supply of service. Schedule 2 clearly says works contract is supply of service. Like if you look at any construction service, like when you are looking at a building, so the predominant value of the money that is paid goes to the land, the rest is construction activity. Even if you see the construction activity, if I have to bifurcate into the component wise, the predominant value goes towards steel, cement, tiles, various activities, which is predominant activities going towards goods. But however, the law says this shall be treated as supply of service. Again, erstwhile law we had partly service tax, partly VAT, so 40, 60, 70, 30 depending on the different type of positions that I have taken. But under GST, whenever there is a supply that happens, you can never say any supply as both goods and service. It has to be eternally, eventually, either goods or service. Even if you have bundled and given, you got to finalize and say either it is a goods or service. It can never be a single activity as both goods and service. And that's where the HSN comes into play. And there are different types of HSN that comes. So the HSNs that for the works contract construction services is 9954. That's what predominantly we know. So in 9954 there are various services that have been listed. So your activity of a works contract, even if it is a pure labor or labor plus material, which is a works contract, would still form part of this HSN because it is a supply of service. It is deemed as a supply of service. So either it's a pure labor or it's a works contract, it is still 9954. It has to be fitting into 9954. And more importantly, pure labor rate of tax is more or less is not. But when it comes to the works contract, the rate of taxes differ. That is where we will be spending more of the time today. And feel free to stop and ask any questions as we are seeing. Certain important other aspects is when do we raise an invoice? In case of a works contract, it is generally the time in which you deliver and complete the project is longer, and we call this as continuous supply of service. It's not that one time you just give off and you execute and go off. For it to qualify as continuous supply of service, where it says the supply is agreed to be provided on a recurrent basis under a contract and the period which is exceeding 3 months. That's where it becomes a continuous supply of service. So section 7 says service and supply is including agreed to be provided. The moment I agree to provide, it itself is a supply. The time of supply is very important because that determines when I have to discharge the tax. Discharge of the tax is the cash outflow. So I cannot make the payment of taxes unless I receive the money. In case of supply of goods, one thing we clearly know, we raise an invoice on or before movement of the goods. But in case of supply of service, what is the point in which supply has completed is very difficult to say. And it is relative, it's not explicitly said. Does me completing the service, is it still a supply? Maybe, may not be. You are the recipient, you should accept that you have received the supply of service. You might find some deficiency in the supply of service. So, the supply of service terminates at the acknowledgement of the recipient. The supply of service terminates at the acknowledgement of the recipient. Unless the recipient acknowledges that yes, I agree to this supply, it is not the completion of supply. Hence, in this software industry, we have this popular term called unbilled revenue. From my perspective, I have provided the service, I have deployed the manpower. Now I will recognize revenue. We are recognizing revenue. The time doesn't recognize because the other side has to verify whether the time sheet is complete, the people have spent, the quality of work, everything, and they give a certification. And that's what happens in our government contracts. I may lay down the road, but the engineer other side has to agree my RA bill. I will raise for 1 crore, but the engineer, site engineer says that no, only 10% of the work is not done, not 12%, or this is the additional work that has to happen. Mere laying of the road might not, putting the jelly might not be the end. I might have to do many other works, right? So the other side, the recipient acknowledges something happened, and that is when your time of supply points indicates. So from the legal perspective, the way you have to look at the time of supply would be, since it is a continuous supply of service, there are multiple activities that are involved. You are doing the work, you are raising the invoices, you are collecting the monies. Contracts would be under different activities, different transactions, different types of contracts would be there. So someone will give you an advance, you do some progress, you submit invoice, so different things. Whatever which is ascertainable from the contract, that is time of supply. So there is no definitive the thing. If the contract says on these dates you raise the invoice, so that is the time of supply. If the contract says on these dates I will make the payment 5 lakh, whatever, that is the time of supply. Irrespective of that, I receive some advance, that is the time of supply. So whatever which the contract is provided. Now you may say that what if the contract is not there? Practically businesses do not happen that way. You cannot provide something without any contract. It's like, you may argue with me saying, no, there is no contract. Like, without any contract, how will someone invest some material? Still, it could be a contingent contract where you would have entered as cost plus 10%. Saying that, I will give you all the actual bills. I don't know what is the cost. Contract is going to say take 2 years. Let's look at all the possible hypothetical situations. Project is getting completed after 2 years, and the recipient has agreed to pay cost plus 10%. You also have graciously agreed that you will raise invoice after the end of the project. You are willing to put your money. Now in such a scenario, there is no milestone. There is no milestone. There are no receipts in advances. I am not raising an invoice. What will be the time of supply? So what do you think, sir? Any rough thoughts? Should it be after 2 years?
Till acceptance.
Till acceptance. So you still have to do a fine reading of the agreements and figure out any of this. Like as sir said, stage by stage, if there is some verification from the recipient and something he has agreed, he has agreed. So there is a cost plus 10%, whatever you have incurred the cost plus 10%. And the best thing is every month you draw your P&L, whatever is the cost plus 10%. So you got to figure out, and there is no definitive thing in service, because the supply of service happens only upon acknowledgement by the recipient and not by the supplier. Supplier may say, yes, I have supplied, because service is not visible, it is not evidently visible, it has to be acknowledged. And that is where the contracts come into the place. It's like very simple example, you go to a restaurant and you are buying a dosa. Okay? It is evidently visible the dosa is coming to your plate. But if it is too salty, you say, I reject it. Now, he cannot say that I have provided the dosa, my job is done. The answer is no, supply did not happen. Though he has put the dosa in your plate, you rejected it, so the supply of service did not happen. So it's very important, the acknowledgement from the other party also in case of supply of service. And that is where the government also considered, if the money has already been transferred to it, even that is also an ingredient to be considered as time of supply. So these are the 3 ingredients that needs to be considered.
One practical issue, if we go back to the previous slide, most of these Mofassil areas, we don't have knowledge on these 3 parameters. When the payment comes from the customer, that day there is the invoice. They don't have adherence to running bill. They don't have such a contract. Like government gives a contract for exhibition. They don't have these set of elements established. So how do we tackle with those?
Yeah, so the question is, if the contractor is not adhering to these things, how do we tackle those issues? Valid question. I will park this because I am touching upon this issue again because of the change in the rate. So there are other issues that are coming up. I will discuss this issue.
Sometimes RAB will be raised.
Correct.
Department will accept. But
Payment will come after 6 months.
Payment will come after 6 months. But this contractor, from where I can pay, he will defer it to 6 months.
6 months.
Then only, on receipt basis, he will file the return.
So very valid point. So I definitely want to discuss this issue. So but I want to park it for another 15-20 minutes and we will discuss this. Because there are many other related issues around this. Then the next thing is credit notes. There would be a situations where you would have raised the invoice because you would want to ensure your collectability is taken care of. You have raised the invoice since you want to collect it. But the supply terminates where the recipient has agreed to that supply. Now the recipient says, look, you have raised for 100, but the quality of work which you have delivered is only for 90. The differential 10 rupees will suffer through a credit note. It will have to go through a credit note.
In audit, they are objecting.
Yeah.
Yeah, credit note means sales return like that you treat it, but you pay now. The moment you are submitting the RAB,
Yeah.
you pay that.
Because the recipient has not acknowledged the. By the way, bad debt rate is not a reason for credit note.
Partially accepted.
Yeah.
Acceptance in partially.
Partially.
That means to that extent contract work is over now.
Correct. So to the extent the recipient has agreed the contract work is over, to the extent which he says that no, you have not completed the work or I am not agreeing to the work, then the credit note comes because there is a deficiency in the service. Deficiency in the service would include non-provision of service also. Deficiency in service would also include a non-provision of service. For example, you have, it's like the contract or a simple case, say a client has walked in saying that okay, I would want an advice from you on this aspect. Can you give me an opinion? Now you have sent him a 1 lakh or the supply. Invoice has been raised. You would want to have him make the payment only, then you will start the work. He says, no, I'm not going to do. Right? It's not a bad debt. The provision of service itself did not happen, which itself is deficiency in your service. You agreed to provide this and you did not provide. That warrants for a credit note. Inability for non-payment of the money doesn't warrant a credit note. So having agreed that I will pay, and this is quite common in works contracts, saying that they will agree for a PO, invoice would be raised. After some time they will say, okay, I don't have the money. Let us say, how much you want me to give? 80%, 90%, whatever. If you want money now, you tell me how much you will take. That doesn't raise a situation of a credit note because it's an inability to collect the money. Inability to collect the money is different from the deficiency in service. Credit notes cannot be raised, and this is one other area where the contractor, works contractor, makes a credit notes just invoice versus receipt difference. They raise a credit note. You got to have a sufficient document which says that the service itself is not delivered. There is a deficiency in service. The next thing is, which is very important, is under section 34 there is a time limit to issue the credit note, which is September of the next financial year. As of now, even though there is a provision to move it to the November, which will be very soon affected, but as of now it's still the due date of filing of the September returns. Within that the credit note shall be issued. If you are not issuing before that, so you have lapsed your time limit, so your right to reverse the taxes that have been paid will go off. Now you may argue saying that my fundamental right, the liability to pay taxes happen only when there is a supply. When supply itself did not happen, how are you collecting taxes from me? You can still ask. But section 7 says agree to provide is also a supply. And since you have agreed, the time limit to correct is still September. So that one has to be very carefully covered. However, wherever the contract provides for escalation, and which is very clear in a works contract, whatever you have agreed will not be the final price. And I'm sure all those who deals with the works contract, they clearly know when they start with an estimate, and as the work progresses, there would be an escalation. You are digging something, suddenly you encountered an stone, so you need to blast it. Or you are constructing the road, but suddenly the deviation happened. So for some stretch you have to deviate. Anything you undertake in works contract, what has been agreed versus what is finally delivered, there will be changes that happen. And these changes after the delivery, you will raise a differential invoice, supplementary invoice, which is called as a debit note. However, there is no time limit because you are estimating the time after the completion of it. You will be raising a debit note for it, including if you raise clauses where there is a penalty for late payment. So penalty is by way of interest. So since the other party did not give you the money in time, you may raise a debit note for the interest. Even that interest which you are raising, it will be akin to the original supply. It is not like an interest income which is exempt. It will still suffer the original rate of tax. This is another common thing, one error which I noticed. People park it as interest income in the P&L and do not discharge GST on it. So be careful of it. So there are the timelines, and you also have to maintain the documents. The record keeping, Rule 56, read with section 35, says that the documents have to be maintained the project wise. Each project wise you need to have the documents. This is one advice which we need to give to the works contract. Now what should be the rate, type of tax he has to charge? So I'm picking up easier things first so that we can touch the rate. Whether it should be CGST, SGST or IGST. Again, there is one common myth that happens that anything to immovable property, it always has to be CGST, SGST. There can never be an IGST transaction. I would say you can read that as a thumb rule, but that's not the answer. The type of tax is always dependent on the location of the supplier and the place of supply. If the location of supplier and place of supply is the same place, same state or same location, it will be CGST and SGST. Only when the location of the supplier and the place of supply is different, then it goes to IGST. You all know the location of supplier, that's where he is registered in. So what's critical to determine is the place of supply. The place of supply with regards to an immovable property, IGST Act governs section 12 subsection 3 says, any activity directly in relation to an immovable property would be the location of the immovable property. Only exception is if the property you are constructing is outside India, then it is the location of recipient. Otherwise, the place of supply will always be the location of the immovable property. Let's say you have a road development contract or extension, you are building and something is crossing from some portion is in Andhra, some portion is in Karnataka and vice versa. You got to look at where the location of that immovable property is, and that is the place of supply. So you might build a guest house for Karnataka in Tirupati, right? So it's still the place of supply will be the place where the property or the immovable property is intended to be located or it's located. And it is not just the construction activity, it is also the allied activity, which is the architect service, interior decorator, surveyor, engineers. All these services would also be restricted, taken to the where the property is. Now coming to the important aspect for discussion is what is the rate GST rate for this. Little confusing or more confusing. We'll flow through the slides and we will pause appropriately. Firstly, the services could be provided to, the works contract services would be provided to a central government, state government, a local authority or a union territory, or it could be others. You will have maze of tax rates starting from 5% till 18%. We will decode different services, different tax rates. Firstly, let's look at to supply to government. In all the entries, the central tax rate, notification 11 talks about rate of taxes, notification 12 talks about exemptions. Entry 3 of the 11 deals with the construction activity related and works contracted related. So I am ignoring 3.1, that is the amended rate of tax for the apartment construction. 3.2 is dropped. So we are starting from 3 bracket 3. So it's a composite supply of works contract which is supplied to central government, state government, union territory or local authority. What is struck off is GA or GE, which is government authority or a government entity. So if the supply is to them and the nature of supply is, it could be construction, erection, commissioning, installation, repair, maintenance of a historical monument, archaeological site, etc., etc. Canal, dam or irrigation works, or building a pipeline, water supply or water treatment. Right? If this is the nature of the supply, then the rate of tax is 12%, other than government authority and government entity. With effect from 1st January 22, so these two categories, the government authority and government entity, have been shifted from a 12% category to 18%. So till 1st January, they were enjoying the rate of tax at 12%, and after 1st January, they are enjoying a rate of 18%. And please note, this is a continuous supply of service. So I would have got the contract in 2018, I might have completed I'm still doing, I'll complete the contract in December 22. So something which is running into 3 years. Now, there is a change in the rate that happened suddenly in between. Then there is another entry, which is composite supply of works contract, where the civil structure, this is about like a building, and which is used for other than commerce, industry or the business. I am constructing it for the government, which is not used for commerce, industry or otherwise. Or I am constructing a residential complexes predominantly for self-use of the employees. Like you are building quarters, police quarters, etc. You are building some quarters. Or you are building a government school, educational establishment. Here the rate of tax is 12%. Here the rate of tax is 12%. Then there is a composite supply where predominant work is earthwork, and 75% of it. There is another thing you got to say, earthwork, which is more like excavations. 75% of it is the works contract. Let's say what is earthwork. I'll come back to the definition. Yeah. So earthwork is again not defined under the GST. Basically, earthwork is, when you look at Webster dictionary, it says something to do with a field formation. Collins dictionary says excavation of the earth, and Wikipedia says the processing of the parts of earth surfaces. So predominantly, if you are saying earthwork is removing some soil, removing rocks, making the road, leveling some certain things or bringing the road or else to a certain, elevating to a certain height. So it includes all of this. So when the work which is included, 75% of it is earthwork. In the bigger contract which I have given, 75% is earthwork. Then the rate of tax is 5%. Then the rate of tax is 5%. Again, the rate of tax, when I say 5%, it is only to central government, state government and union territory or local authority. If it's a government agency or a government entity, organization, it is 18%. Then the next, subcontractor to the main contractor, it is 12%. There could be a situation where I am not eligible to bid. The contract demands there should be so much amount of turnover or so much experience. So Mr. X has bid the contract. However, he does the outsource of that contract to Y. So whenever there is an outsource of a contract by a main contractor to subcontractor, the rate of tax, subcontractor is not providing to the main contractor, to the government, he is providing to main contractor. We are looking at the entries on supply to government. Here the subcontractor is not providing to the government, he is providing to the main contractor. But still the rate of tax is not 18%, it is 12%. Then these are the rate that changed starting from 1st Jan 22. Now what is very important to understand is the government entity, government organization. Government again is central government or state government. And when we say central government or state government, like whatever in the state government, whatever you are money getting released straight from the treasury. So the departments which are directly under the control of the state, which is functioning from the state khazana, will be a straight state government. Then comes the local authority. So the local authority is panchayats, municipalities, where there are an independent bodies which is running to take welfare of, because they, like BBMP or so, which is taking care of a municipality. So these are all your local authorities where they take care of a development of that area. So again, under the Constitution, Article 243W and G, they have been assigned responsibilities that they take welfare activities of that area. So they are local authority. So the concessional rate is given to state government, central government and local authority. No concessional rate for a government entity or a government authority. Now what are these? Government authority is a board which is set up by the parliament, where 90% of the equity or control is again carried out, is held by the government, but they are taking care of the functions which have been assigned under 243W or G. That's what the municipality or panchayat. While a government entity, it is a separate body which is again set up by the parliament or established, where they have substantial control, which is 90% and above. So these are the government entity and government bodies, like your BDA. It is the government authority. They have rights to plan and everything. When you are supplying something to BDA, you are not supplying to the state government. So the works that are, though today everything is linked to your Khazana website and all payments are going there and coming, not necessary that just because it is integrated one payment gateway, it is everything state government. So a contract which is awarded by these entities are not state government. So you have like Jalgaon. Now there is PWD works that happen. Even there is a state government, then there is a sub-constituted bodies to maintain. Like you have BESCOM. Is BESCOM state government? Answer is no, it's a separate again entity which has been formed. So you got to differentiate what is the central and state government, and though these are 100% operating under the state, they are completely different. So This is where the biggest, I would say, litigation likely to come in the future, because the distinction is not clear. The entity which is awarding, you go back and ask them, who are you? I'll say, I am the government, I am formed by it. So you there, of course, when you get into the bylaws, you will really understand that they are not state, they are a government authority to entrusted to do some function, or it is a government entity, either of it. So it cannot be at a concessional rate. It cannot be at a concessional rate. So ensuring who is the supplier and the recipient is very important, because subcontractor and main contractor is applicable only to central government and state government contracts. Ensuring who is the recipient is also very important, because concessional rates to one category of the government wing, no concessional rate to another category of the government wing. So this is the two important things one has to look at. Earthworks we have seen. Now we have seen supply to the government. Let's look at other works contract services. Then there are other works contract services. Clause 4. This, the supply could be anyone. It could be government or non-government, it could be anyone. Rate of tax is 12%. However, it is the supply in relation to construction of a road, bridge, tunnel, or a civil structure which includes building under specified schemes, or it could be redevelopment of slums, or construction activities original or repair for economically weaker section society.
NHA is a government body or enterprise or authority?
Very good. So National Highway Authority of India, which is responsible for development of roads across India, and which is straight under the central government, and it is which is completely under tender. Is it a central government? This is the question. What do you feel?
We feel it is an authority.
Okay.
No, one side.
You are correct, sir. It is not the central government. It is a body formed by the central government to undertake certain activities, and it is directly reporting to infrastructure, road and building development. Still, it is not central government. The funds allocated are from the budget.
But the basic thing, if you go, it is an infrastructure project.
Correct.
Then how government is justified in defining as an authority?
So, just to avoid this confusion, so even this kind of questions came up. So they said, let us merge all this. In a while will come when this the merger of everything. But your point is right. However, under the GST Act, we cannot question.
Now I feel, sorry for interruption.
Yes, yeah. We have
This
sufficient.
47th GST Council has mentored everything now.
I will come back now. Again, that is not
Why
the answer.
Periodically, why they are confusing? Enterprise, government, local. So many confusions they made on 1st January. Now they said everything is merged, all 18%.
Is it everything must?
How
Again,
the
a question mark.
professionals can become, and the business people also, how they can understand? Suppose they are quoted 1 year back, now they are works are on the way. Retrospective effect, if they give, what is their position, how they can collect taxes, from whom they will collect, what is the response?
Good question. Again, this is there in the Q&A. Let's deliberate some time on that also.
Okay.
Then civil structures built under LIG, MIG, various schemes, they are also at 12%. General rate is 18%. Since these are at concession, I am putting it up. Any structure that is meant for funeral, burial, cremation is at 12%. If you are doing a civil structure which is into midday meals, which is sponsored by central government, state government, even this is also 12%. Then one other important thing is construction of a single residential unit otherwise than part of a residential complex, even this is at 12%. So we know that the civil works are always at 18%, but there are categories that enjoy a separate rate, which we should be knowing it. Low cost houses are 12%. Cold storages, infrastructure related, post harvest infrastructure related storages are also at 12%. Then, if someone has not accepted the new rate of tax for the projects which have commenced before 1st April 2019, so which is an ongoing project, they enjoy 12%. Offshore projects, oil and gas exploration, the works contract associated towards this. Now we are looking at the services provided to anyone. Okay, this category is also 12%. Leaving this, any other works contract is 18%. Leaving this, any other works contract is 18%. Now let's look at the subcontracting we have discussed. So if I have to summarize, there are various entries from 3.3 to 3.10. There are some 12%, which is to central government, state government. There is one entry in between, which is in red color, 5%. Government entity, government authority, there are 18%. Those which have been marked as red, those specific category changed to 18% from 1st Jan 22. And in others you are finding 18 and 12. So there are different rates, different entries, different category of recipients. So it's kind of too much of confusion. That's where the 47th GST Council meeting said there is so much of merger, demerger happened. Let us increase this 12% to 18%. So benefit availed by state government, central government, local authorities also from 12% let us move to 18%. This is still a proposal. The effective date is not notified yet.
Notified from 18th July.
So
From 18th July onwards, it is 18%.
18%. It is not the retrospective effect. So like 1st January there is one cut-off date, then there is a next cut-off date. Right? So now is all the rates have moved to 18%? Again, no. Your Earthworks, which was at 5%.
Any variable raised after 18th of July, it has suffered 18%.
So sir is saying,
irrespective of the government entity, authority,
or anything,
anything. No.
anything which is
No headache is okay. But retrospective or prospective, we have to see that.
yeah, we will see
And
that.
also-
Is it retrospective, prospective? We will see. Now these tax rates are changing. How do we handle this tax rate change?
Yeah, that's what.
So
From 18th onwards.
now the time of supply which we have read in section 13 is linked, time of supply is linked to various activity, provision of service, raising of invoice or receipt of money. Since there is a change that is happening in the rate of tax, we need to educate the contractors to say whether they have to adopt 12% or 18%. Let us take two scenarios where, like for either 1st January or your 18th July, where the cut-off dates which you are looking at. Let's select two scenarios. Scenario 1, I have completed the supply. What do you mean I completed the supply? I have done, the engineer has said that I have completed. Situation 2, contract has been awarded to me. I am still doing the work. I did not complete the work. First situation, supply is completed. Does it mean old rate of tax? Answer is no. Answer is no. You have to first see, have you raised the invoice? Have you received the money?
Transfer of property is the cut-off now.
I would still say transfer of property is also not cut off.
No, before 17th transfer of property took place, you have raised the RA bill, pay 12%.
So this is the questions you have to ask.
18%.
Correct. These are the questions you have to ask. I have transferred the property but I did not raise RAB.
These auditors now, sir, CGST and SGST people, once they come with this one, blindly they are following this dates only.
They are
Beneficial.
Beneficial are not nothing. Just you can give that check, we will go on without penalty.
Their job is to raise disputes.
Yeah.
So that's what they do.
SGST parallel, CGST people are hard.
Great. Section 65 audits today are becoming sometimes nightmares.
That is a very good time for them. After 18th, before 18th, many people will not.
No documentation.
Once they come after 6 months, 1 year, then 12% of
So 6 months, 1 year is very sir. Today 2017-18 is being called for.
Yeah.
We are in 2022, 17-18 audits are happening now. And these rate changes which we are talking now happened in 17-18 also.
Yeah.
There are series of events of the rate changes that have happened. Insertions, elimination. Subcontractor to main contractor was not there on the day one, got inserted. Right? So there are changes that have happened.
Yeah.
Now how do we follow this timelines? Documentation. And what is the documentation? If you feel transfer of property happened, you have completed your activity of supply. So supply has completed. Next question you have to ask, have you raised your RA bill? Have you received the money? If both are no. Transfer of property happened, but I did not raise my RA bill or I did not receive the money. Then it is new rate of tax, not old rate of tax. Okay? Supply completed, RA bill is done. I did not get the payment. Still old rate of tax. Supply completed. I am still finalizing because I have 30 days time to issue the invoice. I am still finalizing my paperwork. I got the money. Old rate of tax. Invoice is issued after the change in the rate of tax. You are issuing the invoice after 1st January or whatever the invoice is getting issued after the change in the rate of tax. But the applicable rate of tax will be old rate of tax. Supply has been completed.
Yeah, completed.
I have received the money. I am raising what is pending is just raising of the invoice because I have 30 days time to do all the paperwork. I am raising the invoice.
That means mobilization advance was given.
Has been given.
Okay.
So you got to, it's like you have to look at 2 out of these 3 activities: invoice raised, payment received, supply completion. So 2 out of 3 is in whichever is the regime, that will be the rate of tax. Like in the second situation, I have already issued the invoice. So the date of invoice will go old rate of tax. I did not issue the invoice but I have received the payment. So the date of receipt of the payment will trigger. So again old rate of tax. So this is the criteria. Now pretty simple to know on the paper. And how to prove it, documentation for it. And documentation is not now. My memory is fresh. 5 years later, do I remember that this rate change happened suddenly somewhere, like as the sir is saying, 18th July rate change. Now, who will remember the date?
Yeah,
And the accountant, by then 2 more accountants would have changed.
yes.
The paperwork under works contract is one of the worst paperwork you can imagine because there are too many papers. You will find the finance paper once in between. Most of the papers are some drawings, some POs, this thick tender books. Is the tender book final? It is like how your audit working papers, you have version 1, version 2, version 3, and after that one more folder, final 1, final 2, final 3. Like that you will have multiple documents which have been prepared for the tender. So it's very, very important that the documentation shall be advised whenever there is a change in rate of tax. Similarly, when the supply is completed after the change in rate of tax, I am still doing the supply. Suddenly in between change of rate tax happened. However, I have already issued the invoice. I have said I will raise the invoice in advance. Customer also made the payment.
How it can be, sir, practically?
So there could be a
Without
situation.
supply, raising invoice, how it is possible?
It is the contractual,
Advance, advance purpose.
not like an advance.
Invoice.
Invoice.
Invoice is really. Which situation can be different?
Okay, let's look at contextually. Let's say you are going for buying an apartment, right? You are doing a booking advance. He says 25% you pay book.
Yeah.
Now I didn't even would have laid the foundation. Now let's not get into RERA Act provisions.
Yeah.
I did not do any work there.
Okay.
I said this is like a hot cake. You pay 25%, I will give it to you, otherwise I will give it to someone.
Okay.
It's like kind of demand and supply situations. So where you are going to Mofussil areas where you will hardly get some contractors, but you still need to attend to some work. He will say you make the payment, only then I will do. And I will say this is my estimate. I will raise an invoice for this. You make the payment. Rest we will see a debit note or adjustment at a later point.
Okay.
So some situations would happen.
Okay.
So in such a scenario, I still did not deliver the work. I raised the invoice, I got my advance. Old rate of tax. I might start the work now after the new rate of tax. I didn't even start an inch of work. Still, it is old rate of tax. Yeah. So even here again, 2 out of those 3 criteria that you have to look into, and accordingly the rate of tax is applied. So whenever change in the rate of tax, documentation is very important. Now it appears to be simple. Let's bring a little more complication. The issues is, firstly, my accounting. What is books of accounts for this works contract? The accounting is basis the receipt of money from the government. Now, when does the government make the payment? 3 months, 6 months, whatever be the time period, budget. Now they do a TDS, right? So 2% of the bill value TDS is done. In the month of December, let's say 2% TDS is done. Rate change happened afterwards. I did not raise an invoice. I did not report. So I have not reported the transaction in my GSTR1 nor in GSTR3. In the month of March, let's look at your position in the month of March. You did not receive the money. You did not receive the money. You did not report in R1. You did not report in 3B. Let's say it was a government contract to a government entity or a government authority, not state government, central government. Rate of tax changed from 12 to 18%. What should you do now?
In 3B, even mobilization advance also has to be declared.
Let's say, I am not talking about mobilization advance. I have a separate point. Last point is mobilization advance. I will come there.
Okay.
So I have an RA bill which is given today.
No,
By the way, you should issue a tax invoice. So the RA bill is treated as a tax invoice. Now the invoice is not issued. There is no invoice raised. There is no reporting happen in GSTR1. There is no reporting happen in 3B. Rate of tax changed to 18%. March I have to close the books. I did not receive the money yet.
Revenue recognition.
So revenue recognition, all this while I am doing basis the receipt of money. Books of accounts, I maintain with, practically we know how the books of accounts are maintained.
On what basis TDS was deducted at the rate of 2%?
TDS was done by RA bill.
RA bill means bill submitted.
Exactly. So there is a difference in reporting in GSTR1 3B. Technically RA bill means bill submitted. The RA bills are handled by engineers, not accountants. Engineers make an estimate, approve, some bill happens, basis that it comes for accounting, saying that this needs to be accounted. And Generally, in again works contract situations, those bills are also kept with the engineer, site engineer, whomsoever is there. He is the one who goes to the government, gets the follow-up, along with the check that comes, goes to the accounting department for accounting. That's how practically the accounting happens. So accountant will not know unless he gets the money what is the situation. Now if you take a position that I will raise an invoice now, the rate of tax is 18%. If you are taking a position that I will raise an invoice now, the rate of tax is 18%. You received the money now, you are raising the invoice now. You cannot argue saying that no, government has paid me at 12%. Now you take a position, no, this is a supply that has happened. Let's look at the scenario, even TDS itself is not done, so not reported anywhere. If you take a position, no, I cannot pay 18% now, I will choose to go under 12%. Then your transaction should have been reported in December. You are in March, so you are reporting it late, you will be suffering to pay interest. Whether you receive or not, you will be paying interest. So now, again, there is a collectability, all those issues are there. Right? The tax rate is kind of independent of your invoice. An item which is chargeable to tax, let's say at 12%, in your invoice you are charging 5%. Doesn't make the rate of tax as 5%. Your tax rate is linked to the supply that you have made and not what you have reported in the invoice. So, you got to be carefully closing the books of accounts as on 31st March 22, because the rate of change happened on 1st Jan. Most of the original contract you saw, contract was at 12%. Contract awarded itself was at 12%. So you have to first check for whether it is a government agency, government authority. Sometimes the tenders are all-inclusive basis tenders are also there. Though SR rate, the book which they follow, after the GST being implemented, the SR rate, SR values have been defined pre-GST. It's like GST is extra since the taxes are changing. So the SR values are exclusive of the GST. So this is one thing which you have to look at it. Then the documentation for lower rate of tax is even more important, because I have given various tax rates, various scenarios. So the scenario, the person who is sanctioning is also very important. So those who are doing the audit of a works contract, maintaining these documents are important. Then comes the treatment of the mobilization advance. Now, even before I start the work, even before I issue an RA bill, I would have received a mobilization advance. Even before the thing, I have received a mobilization advance. What will be the tax treatment? So again, the tax treatment will follow this. If you have not issued the invoice, but you have received the payment, that is mobilization advance. You got to establish there is some element of supply that happened. If the supply did not happen and you received the mobilization advance, the tax rate for the mobilization advance would also be the new rate of tax. But if there is a supply that has happened, then it would be old rate of tax. 1st January, 12 to 18% to government and government authorities. Now, central government, state government, local authorities. So, there will be a contracts which are ongoing. So, you will be finding majority of the contracts, some in old rate, some in new rate, some both. And especially in the financial year 21-22 and 22-23, you will have a differential rates for the transaction. So what is the key, if I have to say? The documentation of this for the lower rate of tax is the key. Otherwise, you will be at, again, mercy of the department to say that whatever you have done is right. Officers are going to come after 4 years, 3 years, 4 years. How will you prove whatever you have done is right is very important. Yeah, this is what you have to advise to your clients. So let's quickly touch upon other aspects. Any doubts so far? Okay.
Mobilization advance, there will be one challenge. Can you go back to the previous slide?
It's not obvious.
Previously.
Yeah.
Last line, if you have to see, I have received on 30th December 1 lakh. Assuming 5% is a GST, is whatever new rate assuming 12%. This was argument purpose. 5th January the work is completed. 5th January bill is raised. There is nothing other than 1 lakh. So on 1 lakh, the client would have paid 5%. When he raises a tax invoice after work is done, I will raise an invoice for 1 lakh with 12%.
Correct.
So now the question comes here is, on 30th December, which you have reported in December, written in January, you ought to pay 5% or you ought to pay 12%.
So the reporting of the mobilization advance will not happen in table 4 of GSTR1, it will be happening in table 12 of GSTR1. So you got to park them under advances. Again, table 11. Again, the bigger challenge is this is 11, 12 and 13. These 3 tables are not respected because they have no impact. And I report advance, sometimes I don't report advance. Reported advance has to be reversed in 11B. Those adjustments are not taken care. So this is one area which is again weak in GSTR. So you got to maintain books of accounts accordingly and to adjust it. If you have raised if you are reporting in table 4A and not in 11, then it is not fitting into the situation of new rate of tax. The moment you report into the 4, it means supply is not over, but you have raised the invoice and the payment is received. So old rate of tax would be applicable. Accordingly, one has to take care. So the documentation is the key, is what I would say. Next comes the reverse charge liabilities. This is an area where bigger risks likely to come. Firstly, the government services. Supplier is government, recipient is a business entity. Except the services of the postal department or the transportation, it is all under reverse charge. Renting of immovable property is under reverse charge. The issues are, I make royalty payments. Now, there are 2 things covered under the royalty. Even there is a welfare fund, what you pay to DMZ, Department of Mining and Geology. So there is a fund that goes and the royalty is linked to the kind of the extraction that you have done to the earth. Now, is it a fees? Is it a license? Is a question. The matter is still at Supreme Court. In fact, there are 2 issues under royalty. Royalty, is it a supply of service or supply of goods? What do you say? Royalty, is it a supply of service or supply of goods?
The good question. The supply of goods also it gives meaning.
So,
Service only actually.
it is the plain common man thinking is service, right?
Yeah.
But however, there is an argument also which is taken that the minerals which have been extracted, you are not the owner of it. Government is the owner of it. You are paying royalty to get those minerals or the iron ore or whatever which is the boulders which have been extracted. So you are paying for the goods that have been extracted. It is kind of supply of goods. So should it not be supply of goods? Even this matter is pending in the Supreme Court for being decided and heard. Next, it is a fixed fee which is paid to the government. So isn't it not a permit? Isn't it not a license fee? So given that it is a separate levy which is permitted license, should there be a levy of GST? Will it not be an exempted supply? The position of treating it as exempt supply might be weak in my view, but however, I wouldn't want to say in the court anything can happen. How well it is argued, presented would also matters. Next, the permit charges. Is permit charges are also under reverse charge mechanism? Answer is yes. The another bigger risk, which is the in my view, it is not a reverse charge, but still the litigation would likely to come is there is a deduction which happened in the bill. You recorded as an income in the previous year. There is a deduction happened in the bill, or the EMD which you have paid, there is a withhold of the EMD paying because of some LD levied, some liquidation damages levied owing to poor quality, which you are recording as an expense. Now, since it is recorded as an expense and the payment is made to the government or withheld by the government, the view position taken is okay, it should be paid as a reverse charge. So what it is government supply for it? The answer to it is they have tolerated your poor inefficient services. So it's a tolerance of an act.
Plan sanction fee you pay the for that also GST they are paying.
Yes. So please be advising your clients careful that any payment which you are doing to the government other than license fee. Now the question is, what is this license fee? Like plan sanction thing is also coming. So that is where the litigations that will come up under reverse charge mechanism. So whenever you have a doubt, err on the side of revenue. Pay RCM is a neutral cash flow. You pay it and take credit. If the RCM becomes an issue only in a loss-making companies or heavy capital-oriented companies. Only these two entities are going to hit, or inverted duty structure. So otherwise, you will be able to take the benefit.
Even MCA fees for that matter.
MCF is registered.
On that
RCM, okay. Very good. Then there are certain exemptions. So let me walk through quickly. So that we are in that. Then if there are a pure service which is done to central government, state government, and these pure services are in relation to the 243G or W. There are activities which is specified which a panchayat or municipality has to undertake. If in relation to those which have been executed, and if it is a pure service, it is exempt from GST. A pure service provided is exempt from GST. And if there is an element of material which doesn't constitute more than 25%, even that is exempt from GST. Then pure labor contracts for the Pradhan Mantri Awas Yojana scheme. So please note, that is why I highlighted it is pure. So there is no element of material is involved. It's a pure labor contracts. Prime Minister Awas Yojana scheme. So housing for all, under that scheme, if you are doing original construction or repair and fit out or renovation, any of these works, then it is exempt from GST. Again, documentation is key. You are doing an activity, you are getting the money from the government. You are not charging GST, you are charging at 12%, 18%, somewhere you are a subcontractor. You got to have the documentation perfect to establish that this is this transaction. Then another thing which I have again highlighted and made it as a bold is, if you are doing a pure labor contract for construction of an individual house, like I am hiring you to construct my house, I will buy all the materials, your job is to only do labor work, again it is exempt from GST. But documentation is key in all the situations. Then coming on the input tax credit, we all know input tax credit is plainly allowed, leaving 17 subsection 5, which is a blocked credit. Here the points which I want to tell is on the works contract related activities. See, works contract is a restricted input tax credit. To whom? To the end recipient. But if I am a works contractor, so my job is also, I am buying and selling works contract. In the course of construction, when I buy steel, cement, it is not for me, it is for further onward sale. the restriction of input tax credit will not be applicable if you are a supplier of a works contract. Even though you are a supplier of works contract, you will still undertake some activity of your own building construction. You are constructing an office for your place. To that extent you are restricted because the end use is not passed on. This is one, whatever the building which is capitalized in the books of the works contractor, no ITC, leaving the rest of the things ITC is allowed.
Yes. Small query. If you see the recent changes, there they have said even on, suppose if you are giving your property on a rent to a corporate and if is this thing, then you are supposed to charge GST. In this scenario, can I take an input tax credit? Because I am passing the end benefit. That's
Yeah. So, what does the works contract mean? Works contract mean supply of goods and service in relation to immovable property. Now, 17(5) doesn't apply if I do a works contract to works contract. The question is, I am constructing a building and giving it for rent, commercial rent, like a mall. My whole income is only from the rental income. Can I take an input tax credit?
You cannot.
Because I am still supplying it. It's a commercial activity. I am supplying that building. What else I don't have anything else in my balance sheet. Right? Again, the matter is under litigation. Again,
You are a contractor constructing and giving.
I am constructing a commercial building and giving it for rent.
Owner is contractor only.
Yeah. My job is, I have only built it.
That is B2C, no? B2B means.
I have given it to, it's a commercial complex.
B2B, no?
No sir, let's look at this way.
Yeah.
Like SJP complex, national market.
Yeah.
Other businesses are living there.
Purpose is letting out.
Letting out.
Then B2C only.
No, they are also another business. They are also.
That is their activity is different then.
No, so it is not a B2C, it is a
If you are
B2B.
raising invoice for rent, that person is a commercial person, he will take input that one.
Yeah, the question is, for doing the construction of that building, can I take input tax credit?
No, you are not. You cannot.
So that's the answer to your question.
Yeah, that was in that case. I'm talking about the recent revision.
Yeah.
However, in this scenario, because I'm already registered, I've already constructed house, it was blocked then itself, so I'm not able to do that. Because of the recent announcement, when
That continues, you cannot take input tax credit.
Ultimately, you are constructing your building and letting out. Construction of building, input is not allowed first point. That you are the owner, B2C.
No, so here, what is being let out
Yeah.
is a service, is not a works contract.
Yes.
Had it been like works contract to works contract, you get an ITC.
Yes.
Input is works contract, the output is only some portion of service. There is no works contract, hence the ITC is blocked.
Yeah.
Yeah. Okay, so there is the partial usage. So we have seen the multiple scenarios. There is exemption pure labor, there is exemption for Prime Minister Awas Niwas Yojana. There are exemption supplies and the taxable supplies. So whenever there is an exemption supplies and taxable supplies, it's very important that you got to segregate your books. That is where I said in the documentation, segregation, account by account, project by project is important. Then another important, yes.
Excuse me for interruption.
Yes.
In the 47th council, they have decided all 18%, whatever the government.
Correct.
Okay. Now, again one more notification, it seems they are giving that Prime Minister Roshgar Yojana. What is that?
Yes, Prime Minister Awas.
Awas Yojana scheme. Under that, it is 12%. And again, they are confusing.
No, there is not confusion. So they still want to. So there is a mission where housing for all.
Okay.
Okay. And 60 square meters and below. So LIG, MIG schemes.
Okay.
So they want to keep the housing for all as a low and low cost.
Yeah.
So and for which the input tax credit would be allowed because it will be at 12%. So they will be retaining that. We still have to
Only
review
for
that.
this scheme, under this scheme.
Yeah. So all will be notified from the effective date. Again, you
Earlier
have
it was 1%, no?
no, that is okay. That is where I'm
1
saying.
and 5 was there.
Yeah, so that we are not looking at those entries.
Okay.
3, 1, which has 1A, 1B, 1C up to 1F, we have not touched upon it. That's construction of an apartment complex. Okay? So that we are not looking at. So other than that, there are other entries.
And for independent also, individual.
Independent individual not forming part of a residential complex, pure labor is exempt, labor plus material is at 12%. 12%. Okay. Then the motor vehicles. We all know the motor vehicles is a blocked credit. You cannot take any input tax credit on motor vehicles. Where seating capacity is not less than 30, it is credit is not eligible. However, where it is not applicable is the seating capacity is more than 13%. The next important thing, in case of a works contract, are they motor vehicles? The definition of motor vehicle goes to Motor Vehicle Act, where it looks at the capacity. Of course, these all have heavy capacity. But more important, these are neither a passenger vehicle nor a goods vehicle. They are special purpose vehicles that are created, the cranes, bulldozers, etc. These are all special purpose vehicles. The input tax credit on these vehicles would be allowed for the works contractor.
The star hotels, they will have their vehicles. From airport they bring people. Capacity will be more than 20 hours. But for that purchase of such vehicles, they can avail input.
Okay, good question. Passenger transportation, which is
That
done.
is not passenger transportation. See, their business promotion. They facilitate to the customers. They send to the airport and bring people.
Get you? So
Now, whether the input is available for that?
the answer is again yes and no.
Yes and no.
Okay.
Generally, they devise in such a way, they'll have a travel house. So they'll ask them to brand it among them and then we'll send it to you. They generally don't do that. They have an internal
They will
plan.
say our vehicle will pick up.
Yes.
They will say our vehicle, but it is actually outsourced to a travel agency, which they call it as in-house travel.
Yeah. Passenger will not pay.
Correct.
So as our Pramod rightly said, two categories you have to distinguish, where they say, okay, this is on a charge base.
Yeah.
This is I am going to charge. So whenever you are going for a charge, so it means you are undertaking along with the accommodation service, passenger transportation separately. Whenever there is a passenger transportation, the rate of tax is 5%, with the condition that only input services under similar category is allowed.
Okay.
Other than that, no ITC is allowed. Contrary, you say everything is included, it's a cruise or whatever you are undertaking, and you don't even charge anything for it. So it is part of your business activity.
Yeah.
Then you get an ITC. So that is why I am saying yes and no. So transaction matters, documentation matters. If you undertake both, then Rule 43 would be applicable. Yeah. So these special purpose designed vehicles, ITC would be allowed. That again most would be knowing, but one should be aware of it. Any insurance repairs on the vehicles. If vehicle is disallowed, insurance repairs is disallowed. If the vehicle is allowed, insurance repairs on that would be allowed. Last point is bookkeeping. Accounts and records, we all know what is to be maintained. However, one thing which I would like to highlight is the supplier details and customer details are more important in a works contract. What is he? Is a government agency, government authority, central government, and what is the nature of supply is important. The next thing which is important is most of the time when you are undertaking works contract, sometimes you get the material, sometimes you are doing pure labor. So, but even though you are doing the pure labor, the procurement of the material would be happening by the supplier, by the recipient, and it will be sent to you or to the site directly. You are in possession of the material which do not belong to you, or your possession of material from one side to another side. So it's very important that the documentation is very clear. project-wise accounting has to be happening, and if the goods are belonging to another person which is there with you, you have to maintain documents from whom the goods and services have been received, including the subcontractors. So these are the various things for the discussion, and I thank Bangalore branch for giving an opportunity to discuss on this touchy subject. The reason being, the rate of taxes is changing. That's one other reason. The second reason is the documentation. The different types of supplies, different types of suppliers, different rate of tax. Forget imagine there is no change in rate of tax. Still, the different supplies are having different rates of taxes. That's another challenge. Then the another challenge is this RCM. So there are very key points if I have to say for us to take away. There are multiple services, multiple rates at a differential point in time. Fewer exemptions are there. Some taxes, some services are exempt. There are many things which comes in the audit. There is a miss out on RCM payments. So the reverse charge liabilities are not paid. That's coming up under the audit. And invoicing is generally not done basis the work completion, but the invoicing is done basis the receipt of money. This is also another area where someone needs to be advised. And record keeping, there is a very poor record keeping in this area, and we all know books of accounts have to be maintained for a period of 6 years from the end of the annual returns. So there is a longer duration for which the books of accounts have to be maintained. These are the various touchy areas one have to be taking care. So with this I complete the presentation, and thank you Chairman Sir and Vice Chairman, and though fewer audience but a very clued in and active participation. Thank you for your participation.
Thank you, sir. Thank you for your excellent session, and also taking a patient hearing from us also on the questions asked. I request our chairman to hand the speaker with a token of appreciation. Of course, there were only few members, but I think the discussion was very constructive and a very value-added sessions rather. And I thank all the members who have been here for an active participation. On behalf of Bangalore branch of SRC, I thank all the members and speaker for making it convenient and taking their time out today evening. Thank you everyone. Also a small announcement that the registration is open for the state level conference, which is planned to be held on 19th and 20th of August. So I request everyone to start registering.